Nvidia is up over 12% in the last 1 month. And in this video, I'm going to tell you how you can continue to make so much money, stupid amounts of money. And this is a very important video because just a little bit over, around a month ago, I actually made a video on Nvidia, right? I said how to turn $10,000 into like $1 million, okay? Now, obviously that title was aggressive, but the thumbnail here is 10x your money. And you can absolutely 10x your money on Nvidia without a freaking doubt. June 13, just about 3-4 weeks ago, right? When I called Nvidia and I said buy LEAP options, look at the value. It has exploded. It has exploded 12%. And on a LEAP option, a 12% move in the short term is a 50% move in the short term in terms of your results. So you have made 50% had you followed my, my trade there, okay? And now what I want to tell you is I want to give you an update. What should you be doing right now, okay? So look, when I made this video on June 13, okay, we had 28,000 of you guys watch. We should have more viewers here. We should have more subscribers here, but okay, this was a suggestion. And then also I said how you can turn $50,000 into $500,000 just a couple days after. And the reason why I have been so bullish on LEAPS is LEAPS are literally the strongest and most overpowered strategy, period. Literally, LEAPS can transform your portfolio and get you to retirement a lot faster. If you have 50K, you can literally scale that to 100K, 200K using LEAPS. Of course, you need to understand risk management and you need to understand position sizing. But the biggest benefit to a LEAP is the leverage, Leverage is so powerful, and you already know this, right? It's like one of the wonders of the world, or Einstein said leverage. If you give me a pole long enough, I can move the earth, okay? Maybe he didn't say that, it was another philosopher. But you get what I'm trying to say here, right? What you want to do is you want to go for deep in the money leaps, okay? So specifically on Nvidia, I'm going to show you a trade in just a moment. By the way, I have some options here on Nvidia where I'm doing really good, but it's more of a big account trade that I was doing in my Discord for bigger portfolios. If you have a portfolio that's at least $25,000 and you want to scale it, you should check out the first link in the description and book a free call to learn more about my coaching services. But essentially, I'm running small account trades and big account trades. And on Nvidia, it is good for both. You can run both strategies on Nvidia. So what you should be doing specifically with LEAP options is just buying deep in the money LEAPs. It's as simple as that. Because if the stock continues to run up like it has been, and it has been for a long time, by the way, 6 months, 1 year, 24%. Of course, 5 years, we're in the thousands of percent. But Nvidia is still moving very bullishly, and it still is going for actually a good valuation. So if you look at the valuation of Nvidia, I would argue with you that this is actually going to be a value stock in the future as long as they keep delivering on the revenue, which I believe they will. Okay, the PE ratio is pretty decent, but look at the forward PE ratio. It's already coming down rapidly. The PE ratio of Nvidia comes down rapidly because it has a lot of growth. So this is just a great stock overall to invest in due to momentum. It's up 12%, and LEAP options continue to be a good investment, okay? So in July, right, going into mid-July right now, what should you be doing with Nvidia? Well, you should be holding Nvidia LEAPS. Okay, so 0.75, 0.85 delta is still the move. This leverage means that the LEAP option will move 4 or 5 times as much as the stock itself. If you're just to hold stock, you're up 12%. If you have a LEAP option, you can literally be up between 60 to 100% because you put up so little for a LEAP. I'm going to show you an example in a second. But literally, Nvidia is up 12% in a short amount of time. Your LEAP option will be up 50% in 3 weeks. In 3 weeks, you're 50% richer on your investment. It's absolutely insane. And by the way, on a LEAP option, you don't even care about time decay because time decay, it's going down very slowly. It really comes into the last kind of like you see here in the last kind of like month, you get really fast time decay. But before that, like if you buy a LEAP option, you don't care. Every single day, you're barely losing any money. And that's why it makes sense to purchase a LEAP option because it's better than owning stock. Okay, that's why I keep telling you guys that if you want to really grow, you want to grow your account fast, you need to utilize this strategy. This is a very important option strategy. And it's a very simple one actually. Buying a LEAP option, just buying a call option, but that call option expires long into the future. Okay, typically about 1 year. So if I go to an option right now, I can go for an expiration, say June of 2026, and then all you have to do is you just purchase a LEAP option with around a 70 delta. So let's go down here, for example, 130 and check it out. Okay, this is a 77 delta, so let's go a little bit higher, 135. This is a 75 delta. Okay, pretty good, right? It's in that range of 75 to 85 delta. So you can actually see here the implied volatility is about 44 and a half, almost 45. So it's a really good implied volatility. And the more implied volatility an option has, or the stock has, which really the option is just a derivative of a stock. Options are derivatives. That means a derivative is just like its price depends on something else. So this option's implied volatility depends on Nvidia stock, right? The implied volatility is very good here. But the crazy thing is Nvidia has so much upward momentum, yet the implied volatility isn't super high. 44 is kind of high, but you would think that would be like 60s because Nvidia has so much momentum and so much volatility. So I see a mispricing in the market where Nvidia as a stock continues to go up, yet the options are mispriced. They're pretty cheap. If you want upside and you're an option buyer, which typically I'm not, I'm an option seller for the most part. But if you can buy options for 5% of your portfolio, which I think is completely okay, especially if you have a larger portfolio, you want to have a part of your portfolio invested in LEAPS, specifically high growth stocks. And Nvidia is a prime example of a company that can multiply your money very quickly. And by the way, here's a clip of some very important wisdom that you should be implementing in your LEAP strategy right now. All right, let's talk about income stack and how to stack income. Bicep over tricep money. You're gonna make your LEAPS generate babies for you, okay? You're gonna send out your green soldiers and they're gonna come back with more green soldiers. And we're gonna talk about income stacking using covered calls, all right? So here's how it gets spicy. A lot of the time, if I don't think the stock is going to really shoot up too much in the short term, I will sell short-term call options against my LEAP. This is called a poor man's covered call, okay? So I'm gonna use Nvidia. This is a recent example that I have made. I have purchased 115 call options in my Discord community last week, and we made 20% on LEAPS, okay? Now, given that Nvidia has gone up, I'm looking at the 120 call options, okay? These call options expire June 18, 2026, okay? So in this example, we have a 1-year LEAP, okay? The delta here is 0.76. Open interest is great. Bid-ask spread is amazing. And if you personally like Nvidia, this is a great way to own Nvidia. Again, using less capital up front with the LEAPS approach. But now, let's talk about and learn the strategy of selling a covered call option on a LEAP option, okay? A LEAP option, given that it has high delta, it's in the money, is going to look similar to a stock. It's gonna look very similar. It has the same kind of upside in many ways because it's gonna be very sensitive to delta. So if the stock goes up $1, this LEAP option will go up 76 cents. So given that, we can actually sell a covered call. Since our LEAP option looks similar to stock, we can sell a covered call on a LEAP option. And this is called a poor man's covered call because it's a cheaper way, it's kind of like a back door into a covered call without having to really own 100 shares. You own 100 shares kind of via the call option, all right? So you don't have to, or you don't need to own 100 shares to sell covered calls. The LEAP option actually covers the sell call option and substitutes for the 100 shares that you would normally need to own in order to cover your call. How does that work? Well, let's say that you get assigned on your sell call option, then, well, this obviously depends on your broker as well. So I'm using Robinhood, you can use Schwab, you can use Fidelity, you can use Interactive Brokers. Yeah, all of that is fine. And normally your broker will automatically exercise your LEAP call option as well. So if it goes into the money, they'll typically close out both positions because they will recognize that the LEAP option is essentially a call option, right? And it's essentially 100 shares. So they're never gonna kind of leave you high and dry by, it may happen, which is why we'll talk about managing the trade. I would never even leave it to the broker. So real quick, the broker will likely close out the position together. They will realize that it's a poor man's covered call. However, you just always close out the trade, and I'll show you why it's always profitable essentially to close out the trade. The only risk you have, you would always be taking profit anyway, so you never really have an issue. Let me explain to you using this chart, okay? Let me zoom in here. So look, let's say that you bought Nvidia, right, this call options at 120. Perfect. So 120, right? And then let's say that you sell a 140 call option. All right, so the 140 call option, we're gonna go to sell. And what you want to do is you don't want to sell it for June of next year. You want to collect income along the way, right? So you're going to sell a shorter term call option. Now, you're welcome to do it 30 days. You're welcome to do it 60 days or 90 days. I think all of that is perfectly okay in that 30 to 90 day window. I'm going to go for kind of like that middle amount right now in this example and show you a 60-day to expiration option, all right? This is like not monthly income, but it's income every 2 months, and it's freaking great. It's great. So say that I think Nvidia is going to rise, but it's going to rise steadily to 150 over the next 60 days. So then if I think it's going to go to 150 and not that much higher, I'm going to sell the 150. And notice here in the chart, okay, I'm going to zoom into this chart right now. Notice that it looks great because you're going to make money even if it overshoots 50, but a little bit less money, right? It's going to go down, but you're still in the green. And that's because the LEAP option that you have is very powerful, has a lot of delta, so it's increasing very fast in value. Whereas the short call option here, I mean, Nvidia would have to go above 150, and even if it continues to go up, you're still making a lot of money on the LEAP option, but you're losing some money on the covered call that you sold, but you're still going to be net positive. So if it goes to 150, just close out the trade. It's really as simple as that. You just close out the trade and you're like, hey, I'm done. And you're going to make really, really fast, easy money. The benefit here is that a covered call, you collect income today, right away. It's only 2 months to wait. You still have upside. You still have a lot of upside. But above 150, you start to lose some of the gains that you are making. Okay, so you're going to start eating in to the premium that you collected, and you're going to eat in to, you're going to have some working against you. The nice part is the LEAP option, it has a higher delta. So this LEAP option here goes up in value quicker than this short call option goes down in value. So say like we're kind of like right here, and if Nvidia goes up, the LEAP option goes up like this, and the covered call goes down like this. Okay, so you're trading income for a little bit less on the upside. So you're selling your massive upside, okay? And you can also, you don't have to do the 150. You can say, hey, I'm not sure, maybe it'll go to 160. No problem. So go for the 160 then. So here, if you go for the 160, then you're gonna collect less income because 160 is farther out of the money. It's lower risk of happening, lower chance of happening, and traders are willing to pay less premium for buying this call option. So they're buying it, you are selling it, and you are creating income on your position. So again, you can see here, if I go for 160, then yeah, you truly have a good amount of upside, even more upside, and it's pretty hard to lose money here. You really almost can't lose money. Like even if Nvidia were to shoot up a lot, you would still make more money on your long LEAP option. So this is like an easy way to collect some extra income at really no risk. And my recommendation, my opinion, not financial advice. I'm very experienced, but I'm not licensed, so I have to kind of like to say that. So you're aware of your own risk and you're making your own decisions. In my opinion, you should just take profit as soon as it hits the strike price. So if it hits, say, 160 in this example, just take a profit. You really can't lose when it just hits 160. Just get out, take profit, and yeah, recycle the money into more LEAP options. Recycle that money into other plays.